Today, fintech's quite comeback. Investment up, burn down, profitability improving, and a sector that's skipping the AI hype cycle in favor of real revenue. Potential rate cuts, regulatory regime change, and a crypto resurgence, especially with stablecoins. Welcome, FinTech Talkers. I'm joined today by Nick Christian, Head of National FinTech and Specialty Finance at SVB. As the bank to founders, fintechs, and the VCs who back them, SVB has a unique, broad dashboard on what's real and what's next in our industry. They just released the Future of Fintech Report for 2025. It's like the field guide to the industry. We're going to unpack the report with Nick. Are you interested in hearing both the macro and micro perspectives impacting the fintech industry? Rate cuts, the shifting regulatory landscape, AI reality versus blockchain immediacy, and runway and burn, revenue mix and pricing, and path to exits and IPO? Then stay tuned. Nick's got the data and the stories. Welcome, Nick, to the FinTech Talk Show.
Thank you, Patty. Appreciate you having me. Really excited to discuss the report.
Sure. And thanks for coming on the day you're releasing the report so that we can give a preview to our readers. I know the report's available online as well for everyone to read in detail. But before we get into what you found, Nick, can you share a little bit about yourself and your background? And I know we talked about this earlier. It's great to have a fellow Danville resident on the show.
It is. The East Bay has become quite the hotbed for folks coming out of the pandemic. But yeah, I've been with the bank for 18 years. A lot of that time was spent on product development, off-balance sheet initiatives, and the like. For about the last 6 years, I've been working on our specialty finance initiative, which is our warehouse lending practice to venture-backed fintechs across pretty generic asset classes like consumer, small business, real estate. And then coming out of the acquisition by First Citizens, I took over FinTech nationally. As you can imagine, there's a lot of parallels between what we work on the warehouse side and the fintechs that we serve more broadly across the ecosystem. And so I've been very excited to jump in and help grow that business for Silicon Valley Bank.
Yeah. And as I mentioned in my introduction, I think you have a unique vantage point, meaning several banks do, but I think SVB is very uniquely positioned to come out with the State of Fintech report, your thought leadership, and this is not the first time. You've been doing it for several years. But maybe let's get into that. You released your report for 2025 today. And thanks for coming on the show to talk about it. Your executive summary says fintechs on solid ground, investments up, cash burn for some of these fintechs are down, profitability is improving, growth's kind of stabilized. Paint the summary and dashboard for us, Nick, and then we'll kind of drill down on some of the major points.
Yeah, look, I think broadly speaking, if you look at fintech compared to the other sectors, certainly doing better. I mean, venture investment across the board is down, but fintech is certainly closer to historical norms than most of the other sectors. And I think that's because you're starting to see the proliferation of fintech across different business models, right? Historically, you would have defined a fintech, right? Lending company, pure payments company. But now that integration is taking place with consumer businesses, right? You go to checkout, you have the option to finance that, right? And you have different payment methods. And so that proliferation, I think, is one of the things that's actually keeping fintech fairly solid. And again, not necessarily unique to fintech. I think you're seeing founders certainly have a much higher focus in terms of profitability, right? Coming out of all the free money that existed during the pandemic, being a little bit more in control of your own destiny, I think, is a priority for them. And so, but you're seeing that even more within fintech, right? In terms of, especially on some of these lending models, getting them to profitability. It's one of the sectors that it's tough to scale into profitability, whereas other sectors you can do that.
That's very interesting that you see fintechs more stable. I mean, there's just general popular kind of opinion that fintech's kind of slowing down and AI, and we'll talk AI later, but AI is taking a lot of oxygen. But it's great to hear that that's that's happening, that fintech is strong. And also your point about profitability or discipline, I guess there was free money and there was no discipline. There was too much spend and the valuations were out of whack. And now there's a little bit of that, which is good. It's healthy for the industry as a whole. But within fintech, I know fintech's not kind of monoline. It's obviously lending is a big part of it, but you alluded to payments. So which segments do you see the strength or any weaknesses in any other segments?
Look, I think certainly on the exciting side of things is the payments and lending side of it, right? And that goes again back to the integration, right? You're just seeing embedded finance across a number of different verticals at this point, right? And that makes that exciting. The infrastructure piece, I think, as most folks know, most banks run on very legacy technology, right? And so folks that are innovating in that sector, while it may not get the headlines, are actually positioned, I think, long term for a lot of success. At some point, whether it be legacy institutions like banks, credit unions, et cetera, they're going to have to make that conversion, right, into more modern payment rails, into more modern technology. And we'll talk about this a little bit later, but how that interplays with blockchain technology, crypto, like those are going to come together at some point, and the infrastructure plays will certainly have their moment.
Great. Yeah. No, infrastructure is key. And yes, we'll talk about that. You mentioned about embedded finance and it getting verticalized. Any specific vertical? Meaning, I know we've seen it in kind of maybe retail with BNPL and things like that. But anything it's breaking away in 2025 in terms of verticalization in embedded finance?
I mean, I think you're right. You hit it kind of on the head on the retail side. I mean, you could argue that we're maybe at a top when you can finance your burrito. Right, that may be the peak of the cycle, but retail lends itself to that. Right, you have a willing consumer that's looking to make a purchase and offering either different payment options or different financing options. You have a captive audience at that point, and that makes it a pretty easy conversion.
That's very cool. Very cool. You brought about infrastructure and blockchain, so let's dive into that. But maybe kind of at a macro level, later today, actually, coincidentally, I'm recording with Congressman Mike Flood. He's a leading voice behind the Genius Act and yet to be enacted Clarity Act. And he's going to be talking Money 2020. So he's going to preview with me today on some of kind of Congress or a view from Congress around innovation, regulatory oversight, and stuff like that of Congress and both the administration. So can you walk us through some of the findings around those topics, kind of regulatory oversight changes? I know there was administration change between Biden and Trump. There's a significant kind of policy difference around enforcement. And I think your report surfaces some of these. So can you kind of highlight some of that and we can maybe talk a little bit about them?
Yeah, I think what you're seeing based on some of these regulatory changes is just the sheer amount of pent-up demand here domestically for some of this technology. The previous administration, good, bad, or indifferent, was a little bit more opaque in terms of what the regulatory landscape was going to look like. And that led to, I would say, a flight of talent, right? No one wants to build in a situation of ambiguity, right? And so you had folks leaving the U.S. to actually develop these technologies elsewhere. And what the new administration has done is provide clarity around some of these, right? There's still more to come for sure. But it's provided clarity to the ecosystem, and you're starting to see what that means, right? You're seeing regulated banks trying to take place. You're seeing crypto companies trying to get bank charters, right? So that clarity has unleashed the floodgates and removed the ambiguity and kind of got that snowball rolling downhill. And all you're doing is kind of seeing that trend accelerate as more and more clarity comes out of the administration.
And they have a legislation, I think it's not yet law, it's in the Senate, the Clarity Act, and that kind of the name speaks for itself, I think, talking about that. But maybe shifting gears to what they passed, which is the Genius Act. And it's a lot of stable coins and payment rails and stuff. And you talked or alluded to it earlier. So let's talk about that. So what are you seeing in what Genius Act did or what stablecoins are doing to the industry?
Look, I think the biggest use case you're seeing around stablecoins is on the cross-border payment side, right? Because, I mean, what everyone is really looking for is the the fastest, most efficient way to settle payments, right? And domestically, RTP and FedNow, that may solve the problem, right? Stablecoins may not have as big of a use case here domestically from that standpoint, but anyone that's worked internationally trying to send a payment abroad, right, going through correspondent bank networks, last mile settlement, those issues are real, and stablecoins do help eliminate those problems, right? And so I think that's why you're seeing that use case come to the forefront. But there's other use cases, right? I mean, I think Walmart announced they're testing being able to accept stablecoin payments at checkout, right? Again, U.S. maybe not the best use case given that everyone's got a credit card tethered wallet, but in emerging markets where all of a sudden you have your crypto wallet tied to your phone, right, and you're able to go to checkout and tap to pay and you're settling in stablecoin, that's a real use case, right? And that's really disruptive technology and kind of will help those economies grow fairly quickly.
So a lot of cross-border, obviously biggest use case, but some domestic use case, and maybe it's like you said, it's because we have so much infrastructure already. Maybe some of the other economies make sense. But you talked about RTP and FedNow and stablecoins, kind of almost an alternate rail. And in cross-border, obviously we have Ripple, and I think JP Morgan had built something like a Ripple, and Swift's building that. Do you think stablecoin can disrupt some of that economics? I know it's not just the technology, it's also the network you build of the correspondent banks, but your thoughts on that or what you found in your report?
Yeah, it's always interesting to me when I hear about banks trying to develop, say, their own stablecoin. I'm not, for internal settlement, sure, it makes sense. But in terms of, using that outside of your four walls, I think it's a pretty difficult proposition unless you had, say, a consortium of banks. There's really no quote unquote global bank, right? The infrastructure typically varies via jurisdiction, the local laws, et cetera. So it's tough to kind of facilitate that using your own technology. And so I think that's inherently where stablecoins come to the fore. And you've seen a couple of banks already announce some partnerships with crypto players in terms of helping facilitate some of those stablecoin payments cross-border. And I think you'll see that trend to continue.
Very, very, very interesting. Kind of switching gears a little bit, SVB is known to be a pioneer and created debt instruments like venture debt. I think it's kind of your bread and butter, and you've been doing it for a long time. And I don't know who first did it, but likely SVB. But now we're seeing experiments with kind of crypto collateralized lending. And maybe not experiments, maybe people are doing kind of more and more of it. So what are you seeing in that, the market structures, risk controls, and use cases?
Yeah, I think you're seeing some interesting use cases. I think probably the most common use case for crypto collateralized type lending is on the mortgage side. I know there's quite a few startups working on it. It's a pretty natural use case, if you will. So that's certainly one that's out there. But I mean, any of these lending products could eventually kind of move their way over to blockchain technology, and whether it's stablecoins used kind of as payment or settlement, or even just the ledger technology itself, I think you'll eventually see that kind of move over. If we go to what's happening in the markets right now with Tricolor, right, dual pledge collateral, those things are kind of easily solved with ledger technology on the blockchain. The risk, and then this kind of goes back to the risk controls too, right? I mean, the interesting thing about some of these products, and if you think about a crypto collateralized mortgage, right? You have Bitcoin, you don't want to sell it, you want to buy a home. It ultimately comes down to the mechanism, right? It's effectively a margin loan, right? And so, is the infrastructure in place to support those margin calls? How easy is it to facilitate the closing of that position if you needed to, right? Some custody providers hold it obviously hot. Some people hold it warm. Some people hold it in cold. If it's held in cold, right? How quickly can you get it to the market? And so if downward spiral were happening, there are inherent risks that exist there that don't necessarily exist in the fiat markets. But the one transaction that probably interests me the most is the one that Figure completed. They actually just disclosed the facility of crypto-backed loans, which is inherently one step away from the securitized markets, right? And once you access the securitized markets, right, then from my perspective, you officially have an asset class at that point, right? when public investors are really willing to dive in there. And so that's the one that I've been paying attention to the most. As right now, it's a lot of private credit diving in on that front. But I think you're going to see regulated institutions eventually have to dip their toe in that water as not only stablecoins become mainstream, but crypto collateralized lending becomes more mainstream.
Yeah. I think Nick referred to Figure, Mike Cagney's new freshly minted IPO company, and they're kind of leaders in this space, including stablecoins. On the collateralized aspect of crypto, did Genius Act make some difference? Did they kind of talk about that, or how did that kind of get clarity to move on with whatever LTVs and things like that?
Yeah, there are certainly some aspects to that in the Genius Act. Again, I think there's more to come in terms of additional clarity around that. But that certainly helped, right? Because you saw the Genius Act pass, and then you saw this transaction basically a fast follower, right? And so whether private credit needed the additional clarity or not, right, that's ultimately, from my perspective, what pushed this transaction probably over the line.
And other things, I know we talked about Genius, we talked about a little bit of regulatory clarity, and which is coming down the pipe. What about 1033? I know last year was very different. This year is very different around, at least from a policy perspective. Did you see anything on that, Nick?
That one's interesting, right? What is the saying? If you're not paying for the product, you are the product, right? And
Yes.
so as you've seen a push relative to banks, right, moving away from overdraft fees, those type of things, right, and getting more and more closer to free banking, that's a revenue stream that needs to be replaced somewhere. And now with 1033 kind of pulled back, it gives, right, commercial banks the ability to charge for that access, and we saw JP Morgan jump at that, right, with Plaid and the data access there. Now, I think that's going to be revisited probably in the not too distant future, because I don't think long term that's great for consumers to not have control over their data. But you can see how that quickly happened in terms of we've lost some revenue streams. This is one we can add pretty quickly, and folks want to pay for it.
Yeah. And one of the other, besides the regulatory kind of regime, one of the other macro factors is the interest rates environment. And there is this conflict between the administration and the Fed, and it's being litigated and things like that. Obviously, the administration wants a rate cut, and it looks like there will be rate cuts. And I think you saw that as well. So I want to take your feel on what that means to the fintech ecosystem in general. And there's some other macro things that are going on, like the tariffs and the bilateral trade agreements and things like that. I don't know whether that touched on fintech as much, but if it did, feel free to kind of opine on them as well.
Yeah, we'll start there. I mean, the tariffs certainly didn't help, but they didn't impact fintech nearly as much as sectors that are actually selling physical goods, right, that need to get things imported from various countries. But disruption's disruption, right? And uncertainty in the market doesn't help anybody. And so I think you're just seeing that kind of have a ripple effect. I agree. I think we're going to see decreasing interest rates. I think the difference now is that if I look back to ZERP, you had a lot of fintechs created in that environment where, they didn't have all the parts of the model dialed in, right? And so, yeah, it looked profitable in a zero interest rate environment, but became quickly not profitable as interest rates went up. I think the difference now is you have more sophisticated management teams, you have more established fintechs that have actually made their models profitable in the current rate environment, and so a decreasing rate environment will actually only help them. And so I think, as we talked about fintech being on pretty solid ground, I think a decreasing rate environment is actually one of those things that could potentially help accelerate fintech further.
And do you advise fintechs on some of these kind of managing interest rate risks, Nick, as part of your kind of just overall role at SVB?
Not so much managing interest rate risk, but certainly especially on the lending side, certainly making sure it's top of mind, right? That, as a consumer, right, lenders are historically consumers of capital, not only on the equity side, but on the debt side, right? They need to finance these portfolios. And that's probably their largest cost of capital, right? And so just making sure they're cognizant of what rate movements will do to them, which is, again, when these startups were founded in ZERP, I don't think they thought too much ahead of what happens if rates go up. And the times were good. It was zero interest rates. Equity was free, right? Things were just rolling along. And then when rates went up, it's really tough to pivot your model because inherently you're going to have to pass that cost along to your customer at some point.
That's right. That's right. Yeah. So it's very interest rate sensitive, and now they're going back down, but that does mean so. But I want to chime in, or have you chime in on practically how should fintechs who've already raised at whatever capital cost protect margins and their valuations as interest rates go down? What tools and timelines matter most?
Yeah, I think one of the trends you're seeing, we're going to talk, I think, about M&A at some point here, but is that you can't be a one-trick pony in fintech anymore, right? And so I think what you're seeing is folks looking to diversify their product offerings, right? And so if you take, I don't know, use Robinhood as an example here in their acquisition of X1, right? Rather than necessarily standing up a card on their own, which they certainly could have done, but they made the acquisition, but they already had an installed base to sell to. So your customer acquisition cost in that scenario is effectively zero, right? Mm-hmm. And so you're effectively adding a product line that's going to be profitable day one because you're not actually having to go acquire customers. And you're starting to see that in other areas too. And some of that's on the payment side, right? Whether that's geographic diversification, right? Or historically companies that haven't been in payments. Look at the Bridge acquisition by Stripe, right? Allowing them to move into stablecoins, which is certainly a hot topic, right? Mm-hmm. So you're seeing folks looking to diversify their business models, either geographically, but more so from a product offering perspective.
Gotcha. So from monoline to multi-line, looking more like a bank. And was a trend already happening in the large fintechs with SoFi and Block and Square and so on. But you're saying you're seeing that now in the kind of the smaller fintechs as well.
Yeah, I mean, SoFi is an example of like taking it to the next level of actually becoming a bank, right?
Yes.
Which has its benefits and has its downsides, but right, for a lending company like SoFi, I mean, your cost of capital goes down drastically when you become a bank.
Mm. Yeah, so the arbitrage, or the regulatory burden that goes up is still less than, say, the advantages in cost of capital. So having a charter is actually beneficial if you have a certain size, I guess.
Yes, in some scenarios, for sure.
Yeah. So you brought up M&A and a little bit while answering the monoline to multi-line. So let's kind of jump to that. I think you saw that this has been a good year, especially on IPOs and M&As. But what did you see, Nick?
Yeah, look, there's been a lot of activity, which normally is a very positive thing. I think you'll see in the report that a lot of these M&A transactions haven't actually reported valuations, which generally speaking means that they're not necessarily net positives for investors. But the overall benefit is that capital is being returned to VCs. That capital is being returned to LPs, which is inherently going to allow for new fund formation, which is eventually going to fund the next new startup that's going to become the next big thing. And so that's the bigger thing. For so long, we've been in this period of no IPOs, no M&As, right? And so you just had capital tied up, which just basically put a drag on new company formation, right? New funding rounds. And so I think that floodgate has also started to open, and we'll kind of see the trickle-down effect of that over the next couple of years.
Yeah. And you briefly talked about some, but do you want to list some interesting IPOs which are holding well, and any M&As that were good?
Yeah, well, look, I think you have two that are doing very well, right? Circle and Figure, right? Both tied to, again, the crypto ecosystem. So you could argue that they got a dual tailwind behind them, right? They're in fintech and they're in crypto, so they've got a little bit of a dual tailwind. But again, even the Chimes, the Klarnas, right? Them being public is a net positive for the ecosystem in general, right? They may be trading down from kind of where they were, but that's not necessarily a negative. It's actually the market probably level setting on where these business models probably should have been priced to begin with.
Interesting. So Circle and Figure, both fintech and crypto, as you said, double tail compared to Chime and Klarna. They're doing all right, and there's Gemini too, right? Which is
Sure.
also on the crypto side, but it's kind of doing okay. I think it's not as good as maybe Circle and Figure post IPO.
Yep, that's right.
Yeah, but I think to emphasize the point you made, right? So the capital was locked up, and that's why we saw a little bit of the crunch in the last couple of years. And the good news is that's opening up. So the IPO is returning capital, M&As are returning capital, and new fund formations happening. So the early stage is getting more money. And any findings or any thoughts on where some of that new fund formation or new investments are going in fintech?
Yeah, I think the report touches on this quite a bit in terms of, again, crypto is certainly the place that's receiving the most of it, and maybe rightfully so. Given the regulatory shift, you got to strike while the iron's hot. There's no telling what the regulatory environment will look like in, say, 3 years. So you capitalize now. But like as I mentioned, I think infrastructure is probably a little bit lost here in that there's so much legacy technology out there, and so finding a way to actually make legacy technology new again is going to be important. Does it happen in 2026? Does it happen in 2027? That I don't know, but I think that's a segment that I'm actually watching keenly in terms of someone that's actually going to come in and really disrupt kind of the legacy infrastructure that sits out there.
That's interesting. And I think I saw in the report about AI or AI in financial services. That's not getting as much. It is getting some, but it's not getting as much as the two areas you talked about: crypto, stablecoins, and infrastructure. So talk a little bit about what you found.
Yeah, I think if you looked at the beginning of the year, right, agentic AI and autonomous decision making was going to change the financial landscape, and that may still happen at some point, but there's also downsides to that, right? If you think about Patty, if you had your own bot that was actually going and searching for the highest interest rate every day, right, or every hour, and moving money between accounts, that's not necessarily great for the banking system as a whole, right? Not a lot of stability there,
True.
right? And or even on the insurance side, right? If you're going out and searching for the lowest car interest rate, the car insurance rate. So there are downsides to some of that from the agentic AI side. And then when you look at kind of maybe some of the better use cases within fintech, right? Fraud monitoring, KYC, AML, it can help into a point. And I'm going to speak from kind of a regulated bank perspective. You're not going to get to autonomous decision making, right? In a regulated bank, right? A regulator is going to want to know that there's still a human being ultimately making the decision at the end of the day. And so AI can only take you so far in some of these fintech models. And I think that's why you're seeing a little bit depressed either adoption or even investment in fintech relative to some other sectors.
Yeah, and you note some numbers, and I quote from your report that AI-enabled fintechs are taking about 30 cents of each VC dollar, which is about half of the rest of the VC investments in other verticals. So I think you articulated why fintech's AI adoption or financial services AI adoption is kind of deliberately lower. There's more in the back office rather than in the front office, right? That's one of the main reasons.
Yep. Yep.
Yeah. So we kind of moved around from when we were talking about M&A and IPOs. I know there's some IPOs in the burner. They're coming down the pipe. Anything that you're excited about?
Yeah, look, I think there's quite a few. I think you got Revolut. I think Brex is out there. I think Plaid is potentially thinking about going. Stripe's an interesting one. With the rise in private market activity, right, and now even with individuals being able to access these companies through private markets. For some of these companies, there's so much liquidity in the secondary markets that you may actually not need to go public, right? If you really don't want to, right? So long as you're profitable and can kind of control your own destiny. I don't know. It's probably once a week, maybe more frequently, where you hear about a secondary transaction that's been completed, right? So that'll certainly kind of be, I think, for some of these, that'll be a decision they have to weigh of, do they really want to take on the burden of being a public company or can they get enough liquidity in the secondary markets that they're just not going to take on the overhead of having to be a public company?
Yeah, and I think I saw somewhere in the report that stable unicorns, which is still private and VC funded, sometimes have 3x times or 3 times more value than the total value of the fintech unicorns that have gone public. So I think being private's not such a bad thing, especially from a valuation perspective. But it does affect liquidity for the these funds as well as the LPs.
Yeah, and look, I think valuations are back on the upswing, but I mean, the minute you get on that path of being a public company, you have to face the reckoning of whether the valuation will hold up or not, right? Yeah. And as we mentioned a little bit earlier, we've seen some that have done well post IPO, and a couple others that maybe have not done as well post IPO. And so, but you're going to find the correct valuation if you do go public. Whereas in the private markets, you have a little bit more, let's say, room to play with.
Yeah, and we talked a little bit about this already. Excuse me, about the M&A and kind of from the monoline to multi-line, reducing CAC or optimizing customer acquisition costs and kind of focus or getting that discipline on revenue. Anything more interesting there? I know some of the prolific buyers or M&A guys are Coinbase and Stripe and some of the other VC-backed companies. But besides that kind of expanding kind of the value proposition or geography that you already mentioned, do you see anything more interesting in M&A?
No, I think you're going to see it. I mean, if you look at, I'm going to compare Coinbase and Stripe since those are the two you mentioned, right? Coinbase was really more focused, and this goes back to kind of broadening their product offering, right? If you look at the acquisitions they've made, they've kind of looked to broaden their product offering in what is their already core market. And then Stripe, as we mentioned, their acquisition of Bridge actually diversified them into a payment rail that they didn't have before, right? And so you'll continue to see that trend amongst other VC-backed companies. And again, this is the monoline to multi-line. But either way, they're going to be adding revenue streams to, again, kind of further desensitize them to whether that's interest rates, whether that's consumer behavior, right? I think one of the interesting trends that hasn't really played out yet is, with student loan payments coming back on, what does that do for that subset of folks? And so you could see folks that were either heavy savers or heavy, traders on a crypto exchange that all of a sudden have a lot less liquidity, right? And so you could see that profitability go away, and so you're looking to add other product lines to help diversify that.
Interesting, yeah. That is interesting. And kind of just stepping back now, it's definitely crypto, stable coins, and kind of the entire blockchain. And then you talked about infrastructure. And what's running in my mind is one is kind of more DeFi and one is what we call TradFi or traditional finance. And looks like they're kind of coming together, or those are the two main kind of drivers for where fintech is today. And AI is there, but it's kind of almost a distant third in terms of the top trends. First of all, do you agree? And then kind of a part question there is, are TradFi and DeFi converging into one system rather than remaining separate silos?
Yeah, what is it? Rock stars want to be athletes and athletes want to be rock stars, right? So you got traditional finance institutions that, as I mentioned, are looking to add, whether it's stablecoin components or custody components. And make no mistake, they're doing it from a defensive posture, right? They want the assets to sit in the fiat banking system for as long as possible, right? But you also see folks on the crypto side, as I mentioned, they're limited bank charters, right? But some of that's so they can custody their own assets, but they're moving closer and closer to the regulated environment on their own. Because I think what you're seeing, again, like when I talk about stablecoins, from my perspective, it's really just another rail, right? And so if you're trying to send money internationally, right, you can send it via wire, you can send it via stablecoin, right? The difference is how quick do you need it there, at what cost, right, and what jurisdiction. And so you'll see that kind of play out over time. But I mean, it goes back to folks are really looking to make payments in the most efficient at the lowest cost. And so if stablecoins allow them to do that, they're going to take that path. If you can do it via RTP or Fed now, you're going to take that path, right?
Mm.
But what you are seeing is that convergence of, as stablecoin becomes much more of a traditional financial rail, you're seeing the crypto companies move closer and closer to being, what a traditional financial institution looks like. And then again, a traditional financial institution sliding over, saying, well, we kind of like this payment rail. It's efficient. It's a good use case. Our clients are asking for it. And so you see those two just kind of coming together. And so we haven't really seen it yet, but, you're probably going to see a wave of M&A of, large financial institutions making acquisitions of crypto businesses, right?
Wow.
At some point, right? You'd probably need more regulatory clarity around that, but you can see those two coming together at some point in the future.
How interesting. That. Well, we need to create a nice little tidbit on that. That's huge, Nick. And a few years ago, we would have had, that can never happen. These are two different things, DeFi, and that's why the term was coined, the
Yep.
DeFi and TradFi or central finance and so on and so forth. But what? So the broad implications could be that they merge and regulatory guidance might be also kind of together. But what about, so we talked about payments and maybe lending. We talked about collateralized lending with crypto and things like that. And then capital markets, I know Figure and some others do that already, or the whole trend of tokenization of real world assets, so to speak,
Yep.
and settling on the chain and stuff. So in that spectrum of financial services, from just payments to lending to capital markets, do you see all those three kind of trending and getting more and more into trad and DeFi merger?
Yeah, 100%. I mean, you're already seeing that, right? I mean, the tokenized asset piece is a great example of that. I think that's the lowest hanging fruit. But as I mentioned, the Figure transaction is interesting because, the next step for that is actually going down and becoming a securitized asset, which that makes it fairly mainstream from my perspective. And so, yeah, this is outside of just kind of payments and custody. And probably even actually going to accelerate quicker than maybe the payments and the custody piece, is that you're going to see kind of blockchain technology being used to facilitate whether it be lending transactions, right? I mean, the one that always gets me, and it's probably the easiest use case, is like title insurance for your home, right? You know, if if that's on chain, you don't need title insurance. Like that cost just goes away, right?
That's big. That's big. Yeah.
So it's and people are going to fight, right? People are going to fight to not have that happen, but it's just an inherent use case that makes a ton of sense.
Yeah, meaning I've looked into that exact use case actually, and it's a very entrenched and politically connected ecosystem. So yes, they'll fight, but it just makes sense, and the risk is not there if it's on chain, or risk is significantly reduced. So you can cut down on some of the premium cost for insuring and things, title insurance and so on.
Yep.
So yeah, there's some economic value potential that can be created.
Yep.
But this is very interesting, Nick. So I want to talk to you about what this means for the bank. For what does it mean for SVB? How does this all impact? This is, as I see as a fintech report, a state of fintech report is almost a good kind of strategy document for the bank itself in terms of what to do and how to support its customers and so on. So how does it impact the SVB's or the bank's products and services and its operating models?
Yeah, look, I think the way I think about what we do, we serve two purposes. One is to support the ecosystem broadly, right? And then the other is to serve our clients. And so one of the reasons that we produce this report is to obviously support the ecosystem broadly, get folks thinking, hopefully facilitate discussion, create discussion, those type of things. On the product side, as you mentioned, I mean, whether we pioneered venture debt or it was already out there, right? But that's still a fairly novel product when you look at commercial banks. Not a lot of commercial banks actually do venture debt lending. When we launched our warehouse program, it wasn't unique. Other banks did warehouse lending, but they didn't do them to Series A fintech companies, right? And so we tend to be somewhat on the cutting edge of some of this stuff. And we've been supporting the crypto ecosystem for quite some time now, right? Not only just operational banking, but also some transactional flows. Typically, you're on and off ramps. And as I mentioned, I think you've seen commercial banks forming partnerships, whether that be for custody or payments. And I think, any financial institution, say in the top 25 in the U.S., is probably certainly looking at that. And I would say we'd be no different. from that standpoint. Where it'd be concerning is, some of these, you've already seen consolidation on the banking side. And so for some of these smaller banks that may not have the resources to do that, that becomes an interesting proposition for them in terms of what that means for their strategy longer term.
Interesting. Any specific interesting initiatives, especially on-chain or stablecoin wallets that you can share that's coming down the pipe?
Not yet, but yeah, we like as I mentioned, we're doing some work for sure internally on some of this stuff, and hope to be able to get something out for our clients, early first half of next year.
Okay. And I'm talking to the congressman later today. Any questions you want me to ask him? Any specific things?
Well, I would love kind of his view on where regulation is going, but more so, you can thank him for helping with the Genius Act and the Clarity Act, because I think that alone, has been a catalyst for the crypto ecosystem. And so the more clarity and guidance we can get, I think the more you're going to see confidence investing in the building in that market. And so I think that's the bigger thing is, it's not necessarily that regulation's bad. It's just we want to know what the regulation's going to be so that we can kind of build within the requirements.
Yeah, I'll definitely convey that, Nick. And I'm also trying to get David Sachs and some of those guys into my show. Looks like they have the year, meaning, or the president has, they have president's year and also maybe Congress. So it's interesting time that we live in. So it's fantastic. I have some lightning round questions, Nick. Are you okay with some of them?
Yep.
Okay. Okay. So this is a lightning round. This was great. We kind of unraveled a lot of the report. The report's pretty detailed, and you should look it up online. You can search for the SVB State of Fintech Report, and it comes up. But let's do the lightning round with Nick. So most overrated fintech narrative of 2025.
Yeah, I'm going to go with agentic AI and the automated decision making. I think back to the beginning of the year, like that was the craze, and again, it may still happen, but I just didn't see that play out as much as I think people thought it would in 2025.
Interesting. And what about agentic banking? I kind of differentiate agentic banking and agentic commerce. And I know Google, Visa, PayPal, a lot of people are talking about protocols and that and this on agentic commerce. Are you a little bit more bullish on that, or?
I am a little bit more bullish on that, right? If you're going to book your trip to in the Caribbean, and you can have someone that does all that work for you and come back with a recommendation, that certainly makes a lot of sense to me.
Sounds good. Second one, most underrated KPI on the fintech board's deck.
I don't see it enough, and sometimes we have to actually dig in to get to it. Is actually unit economics, right? Right. They'll talk in large numbers, right? Whether that's loan originations, assets under management, right? Total consumers on the platform, whatever it may be. But diving down to really like how much did it take to get that customer? What do you make over my lifetime value? I've had a couple clients where one was a card company, and they were spending, I'm going to say $1.10 to make $1 as a credit card. Right.
Wow.
And so you're like, just stop issuing cards at that point. Like, just stop, because it's not profitable for you.
So founders, if you're listening, the TAM, the SAM, the SOM, and all matter, the total addressable market and stuff. But what Nick wants to see is more unit economics, and what VCs want to see, of course, is more unit economics and path to profitability. So that's take it to the bank with that advice. That's great, Nick. We talked a little bit about this third one. One regulatory shift you think will stick?
Yeah, no, I'm not going to go with one. I'm just going with transparency, right? And so as the administration continues to roll out more legislation, just the shift toward more transparency in terms of what that might mean for the ecosystem is kind of the big one, right? As I mentioned, I just think the Genius Act alone, that spurred a lot of activity just because there's a little bit more known about what's going to happen. And so the more we can get from that, the better it's going to be for the ecosystem.
That's pretty cool. Yeah. And the Clarity Act, I know it's not in law, and as the name says, it's kind of creating clarity or transparency, and that was one of the biggest complaints, at least the people who were on the receiving end, right? The Ripples and the others, Coinbase also, I think. They were yelling from the mountaintop that things are not clear. You have to tell us what's not right and stuff. And I sympathize with that, but it's politics, so we can't solve that easily. Um, One area where stablecoins win first, realistically.
Yeah, I think this is cross-border payments. I think the use case is so crystal clear, and it's already happening today, right? So I think I would say they're already winning. They'll just win more.
Yeah, and you answered this earlier already. So, and there are some internal use cases, but the cross border is the biggest one, right?
For sure.
And I think I was going to talk to the congressman about this, but one of the things is if it's USD stable coins that are doing the cross border, it kind of reinforces that whole kind of US dollar as the settlement currency for the trade, which is kind of in a geopolitical landscape that's being challenged in some parts, right, with all that's going around the world. So in some ways, it's a blessing for the USD system.
Yeah, I mean, we don't need to get into the politics of it, but there's a reason that we got clarity around some of this stuff, right? And whether the U.S. is the reserve currency or it's actually the collateral for stablecoins, like that's inherently good for the U.S. economy.
Yeah, yeah. No, I think that's good, and that's smart of Congress and the administration to do that. So the last one in the lightning round, finish this sentence. In 2026, the best fintechs will be great at fill in the blank.
Being nimble.
Yep.
Yep. Right. The landscape's changing pretty quick, right? Again, the M&A aspect of it's changing business models pretty quick, and so folks need to be able to pivot and pivot pretty quickly. And so I think that the winners will be the ones that are actually the most nimble and can adjust to change more readily.
Good advice. Take it to the bank. Founders, if you're hearing, intelligence and AI and agents is great if it really solves some problems, but dollars and cents or being nimble matter. So this is when somebody who's in the industry for a long time and has looked at it from every angle. So that's great. Thanks, Nick, for playing. And overall, fantastic insight. So tell us where I think you can search for the report, but do you want to give out where listeners can grab the full SVB Future of Fintech report?
Yes, you can grab it on the SVB website. We can also attach a link maybe somewhere on the podcast. But yeah, if you go to svb.com and search Future of Fintech Report, you will find it there.
Yeah. And who are you looking to connect with? I know you meet the fintech ecosystem, startups, and others, but anyone specific that you're looking to connect? I have a broad audience, mostly domestic, but some overseas as well. But who are you looking to connect, and how can they connect with you on social media or other places?
Yep, I mean, LinkedIn's probably the best spot to find me. Nick Christian. And then look, I mean, I'm always interested in talking to founders that are working on innovative ideas, right? I mean, part of the role is understanding, and this kind of goes back to the report, is understanding what's actually going to happen, right? Not what's already happening, but what's actually going to happen. And some of that's to drive decision making internally, but also to make sure that we're positioned to support our clients once they get there. And so, anyone building a fintech, seed through even public companies that are looking to do maybe a skunk work project or those type of things, always interested in having those conversations.
Great. Take him up on that, founders. He's great. He knows his stuff. He's been around the block for a long time. So take him up. He's free for advice or little bouncing ideas. Nick, thanks again. Listeners, if this was useful, follow FinTech Talk, share the episode, and meet Nick and the SVB team at Money 2020. You're going, right? Next week.
We will be there in force for sure.
Yeah, and I've signed up for a few events that SVB is hosting, so look it up. And thanks again, Nick, for being on the FinTech Talk Show.
Thank you for having me, Patty. Appreciate it.